All right, let's set up another trade plan, this time in RCL. Now, I've been talking about the trade plan and I've been doing some lessons on the various components of the trade plan. And today we're going to talk about the review part. Now, we've gone through several of these already. Before we start, I just thought I'd share a little slide I made many, many years ago about this. And this is the way I want to think about trade planning. It's a perpetual feedback loop for learning. I have my method, I have my risk management, I have my record keeping here, my documentation, and then my review, evaluation. I made this a long time ago. Don't worry about the little details here, but it's just a loop. It's like scientific method. So think about it that way. It's not something that's just, oh, this is tedious, this is hard. This is all about learning. We never stop learning. All right, so let's talk about the review, and we're going to keep it pretty simple here. The review can be actually taken apart in several distinct sections, which can get very detailed, but we're not gonna go crazy here. We're just going to talk about number one here. But let's go over it, right? You can review for discipline. Did you make a plan? Did you follow the plan? At some point, you can review also for performance, right? Your statistics, your numbers. We'll talk about that at some point, right? What numbers you keep in track of. You can review for market insight, meaning, all right, this isn't, what a woulda, shoulda, coulda thing about my trades, but let's observe now that we're out of the trade and see what context was the market in. What size was the swing? What was this? Just some insights on the way price moves. And we can review for, developing our method out or other methods. Looking at our numbers, we have documentation. We can spend some time doing that. What the review is not, it's not a place where you just come and beat yourself up. Right? That's what you'll get out of it if that's how you approach it. There's no woulda, shoulda. Approach it as a learning tool is what it is. So we're going to do it simply, right? We're just going to take this number one here. And basically, you're going to ask two questions. Did you make a clear trading plan? Clear, right? I know where I'm going to enter. Where I'm going to put a stop. I know I'm going to manage. I know my position size. If you didn't make a clear trading plan, it's going to be hard to follow a trade. You left yourself a lot of loopholes there. And then that's something you might want to work on as you go. And then did you do what you said you were going to do in the plan? And this is a yes or no answer here. There's no middle ground. There's no woulda, shoulda, couldas. If you coulda, you woulda. And so this is yes or no. And it's okay, right, if you didn't. This is pretty difficult for everybody, but we're working on being responsible. If you didn't, that's fine. You answered no, and then you just go get back on the horse. If you're position sizing properly for where you are, you're risking very little, and you got a lot of tries at it. You keep going. In a lot of ways, in a review, I'm looking for consistencies in so many ways. And actually, I'm looking in consistencies in what I've done. I'm looking in, have I been doing the same thing over and over and over that needs some attention? I'm even looking at consistencies in the market. If I have 10 stops in a row, I'm doing something very consistent and it's pointing me towards something. If all my stops are random, I have to figure out, how to improve that. But if they're all in a row like that, that's easy, right? It shouldn't be hard to figure out what's going wrong there. So I'm looking for different consistencies. But at this point, we're going to keep it very simple. All right, we're just going to look and see, how we did with our discipline. Don't complicate this. You won't want to do it if you complicate it. So we don't have a lot of things. We just started here, but we can go over and I'll give you a basic idea. I don't think I can switch tabs and still keep recording, so I'll just put everything on here. We had FNV. So this is our only completed trade so far. And this was a stop. And so this is, where I'm going to live in my review is, did I make a clear plan? Yes. Did I enter where I said I was going to enter? Yes, I entered short where I said I was going to enter. Did I get stopped where I said I was going to get stopped? Yes. Did I chase it after I got stopped? Oh my God, I should have just, no, I didn't. So I did everything that I said I was going to do. Next, we had made a plan in Adobe. And so we made a nice clear plan for Adobe. This was actually our first plan, which was to enter here. And the method calls for any close outside, the trade gets canceled. Now, when I didn't get filled, did I chase it? No. Did exactly as I planned. And then when it closed outside in my method, right, I cancel it and move on. CMA. This was another plan that we were planning the market to take us in. Do we make a clear plan? Did we do what we said? Yes. And I mentioned in the video with these, right, if this one makes a new low, starts to even just touch the low, the plan gets canceled. Did I get excited over it afterwards? Am I trying to wiggle and jiggle and make something? No. IoT. All right, this one is still in play. Did I make a clear plan? Yes. Is it my method, right? I'm being patient. I know exactly what I'm being patient for. Look, I can just look. I'm being patient for an entry of 33.35. Now, price came all the way up within a penny and didn't stop me in. So I'm not in. And I'm still waiting. It has to crack this low here before I cancel the plan. I didn't say, how can I get a better entry? How can I do this? No wiggling and jiggling. Just nice and simple. Did you plan it? Yes. Did you do what you said you were going to do? Yes. Notice I'm not spending a whole lot of time evaluating, well, I should have known the market was doing this and the S&P is pulling back and the Fed is doing this. Right? There's no, one of the famous last words of traders are, well, I have new information now. No. If you've made a plan, you've baked that into your plan when you cancel the plan, not, oh, it's a reversal bar. Did I make a plan? Yes. Am I following the plan? Yes, it's still open. I'm waiting. I haven't changed it. This guy does not cancel unless I come up here and crack the high with a close. We made a plan in ASO. So you can see the tone of this, right? There's not a lot of market analyzing, not a lot of analyzing my own psychology. Just, did I follow the plan, yes or no? So we made a plan. Did we manage to get popped in? No. It's still open. Do I have new information? Yeah. But baked into my plan says it either hits this low, which cancels the plan, or it stops me in. And I'm being patient because I know exactly what I'm being patient for. And one more that we are in, I think. Len. All right, so we made a plan, nice clear plan. Did we enter how we said we're going to enter? Yes. After we entered, are we managing it how we said we're going to manage it? Well, management BE at 2 to 1. I have not hit 2 to 1 yet. All right, 2 to 1 is going to be up yonder, one more space up here. Am I in the money? Yeah, I'm in the money by a little bit, but I have not hit 2 to 1, so I do nothing. So I'm following my plan. And so that's just a follow-up on this stuff. All right, so Make a clear plan. You do what you say you're going to do. All right, so let's make a clear plan. Basically, I want to trade this swing. I know what swing I'm trading. I'm trading this swing. I'm going to use this wiggles and jiggles in here to capture my entry. Whether it works or doesn't work, right? That's my plan. So I have a template already set up. It tells me what I'm going to do, when I'm going to do it. All I need to do is start filling it out. See, if the more you make as easy as possible, the better off you are. And then I don't have to think. It's set it and forget it. All right, so I'm going to play for this market to take me in at the 50% mark here. And this is just, I'm just taking percentages of the reaction leg. It's 25%, 50, and I'll use that for my risk reward as well. So I know exactly where I'm going to get in. I know exactly where I'm going to put a stop, and I know exactly how I'm going to manage all ahead of time. So let's start filling this out. 123.47 is where I'm going to do a buy stop. I'm going to stop out of the trade. The next line down, 119.71. And we need to calculate shares. I'm going to use my own spreadsheet. You can get any kind of journaling software that, does this stuff for you, as well as keeps track of all kinds of statistics. So today is the 6th. And see, my spreadsheet's relatively simple. This is going to be RCL. I'm going long. Where did I say I was going long? 23.47. I'm putting a stop. I know where. 119.71. And it's going to calculate shares for me, which is just the points risk divided by how much I'm risking. I know exactly how much I'm risking on every trade. It's all equivalent risk. I'm not complicating this. I'm risking 0.5% per trade, which is $500. Just label it. I'm going for 6 to 1. It's going to give me a target of that. So now I can just finish filling this out. And then I always double check before I put it in the brokers and everything else, because I will fumble the numbers around sometimes. 133 shares. And the target I'm looking for, 146.03. And then you can put any other notes that you need to put about, earnings or that kind of thing. And we'll get set up with our risk reward and placing our orders here. And, by doing things consistently, even if I'm making bad plans, right? Even if I'm making bad plans, by doing things consistently, I'll have, since I'm sizing myself pretty small, I'll have done things the same way over and over and over again. And what will happen is I'll be able to look and see where my plan might need some adjustment over time, rather than trying to be perfect the first time. So I'm just going to create an order. I'm going to make this a stop order. Remember, every broker's different. I'm doing a buy stop limit order, meaning if it gaps up, I'm not filled, but I'll leave my order in to get filled. I want to get filled at this level, period. The end. Take me in. Every broker's a little different. Sometimes you put a buy stop order and it gaps up, it's going to fill you at the best price. So you got to double check on your own. So let's tighten this up. We want 123.47, pretty close. We want 119.71 and a target of 146.03. And we want this to be $500 risk. That should give us 132.9 shares rounded up. Okay, just give a quick check to everything. It's going to take us in. We're doing a buy stop our way in. 47, 71, and off we go. All right, so that is pretty much it. Now we wait to get filled or stopped. And if this price touches this low before it takes us in, it will cancel the trade and I will update it. So just remember, your review is really simple. Just, did you make a clear trade plan? Maybe that's something you need to work on. Maybe it wasn't objective. And did you do what you said you were going to do? And if you didn't, you just go back at it again. All right, that's it.